Welcome to Southeast Asia IP SME Helpdesk, your gateway to expert advice on intellectual property in Southeast Asia. In this video, we'll take you through the core services we offer to small and medium enterprises across Europe. Let's dive in and discover how we can support your business. We are an initiative of the European Commission providing free and confidential business-focused advice to European SMEs. Our mission is to guide you through the complexities of IP in Southeast Asia and help you safeguard your innovations and creations. Our helpdesk offers a comprehensive suite of services tailored to meet the unique needs of European SMEs. Enquiry Helpline. Have an IP question related to Southeast Asia? Reach out to our Enquiry Helpline and receive expert advice within 3 working days. Or book a one-to-one meeting directly with our IP business advisor via this link right here. Training and webinars. Join one of our training sessions or webinars designed specifically for European SMEs across Europe and Southeast Asia throughout the year. Stay updated on upcoming activities by subscribing to our newsletter and connecting with us on social media. Publications. Access a treasure trove of resources on our website, including country fact sheets, industry-specific IP guides, and general IP guides covering a variety of topics. Dive into our publications to enhance your understanding of IP laws and practices. Access a wide range of resources anytime, anywhere. IP business tools. Explore our IP cost and diagnostic tools. Accessible on our official website. These tools are crafted to empower you with the knowledge you need to navigate the IP landscape effectively. The Southeast Asia IP SME Helpdesk is your reliable partner and go-to resource for navigating the IP landscape in Southeast Asia. With a range of services at your disposal, we are committed to helping European SMEs protect their innovations and creations and succeed in the global market. Contact us today to take the first step towards securing your IP assets and unlocking new growth opportunities.
So hello, good morning, good afternoon to everyone, whether you're connecting from Europe or from Asia, Southeast Asia. My name is Benoit. I'm the IP business advisor of Southeast Asia IP SME Helpdesk. You probably know us. Today we are gathered with 2 key experts to cover a very important topic, but also quite technical. So we'll have Christine and Peter that I will further introduce later. Could we go to the slide after? Yes, so here the team for today. This is the agenda. So we will cover a topic called IP valuation. I will explain briefly what is valuation and also intangible assets, but the core presentation will be done by Peter Kaldos and then by Christine. So here you see very different parts which will be covered, and we'll finish with a Q&A. So I guess everyone knows how to use Zoom. If you have any issue, please feel free to reach out to us by chat. The session is being recorded, so you will have a full recording available afterwards, after the session, and you can maybe check again some of the details and comments. The PPT PowerPoint will also be shared in PDF format, so in case you have this question, you already have the answer. And please feel free during the whole webinar, it's live, to ask your questions via the Q&A chat box, the special box that we have, and we'll take a few minutes at the end to answer and share comments if there are any questions. But I really invite you to share your comments, because it's the best moment, the best opportunity for you to learn more about IP, about valuation, about value. So it's going to be quite interesting. Could we go next slide, please? So, well, we just saw a video, so I will be very brief to re-explain what is the helpdesk. We are an initiative of European Commission, and basically we provide free support. It's a lot of different services Our aim is to raise awareness on intellectual property, to educate, but also to advise. So today we are training you on a special topic on IP valuation. And basically we are reachable via email. We are reachable also on our social media networks. And this is a special service free of charge funded by the European Commission. And we target all SMEs, startups, entrepreneurs of Europe, either you're based in Europe or in Southeast Asia. The next slide is just to remind you about the different services we have. And basically, we are doing today third image training. Can we go to the next slide? This is one key feature that was not explained before. Basically, it's like connecting yourself with me, and you're able to discuss about your IP strategy, about your questions, either for protection or for enforcement. And we'll share again the link at the end. It's quite easy to book, and it can help you to save some time and also money. Now we go to the next slide. So we just wanted to kickstart a bit the webinar with this poll question: how much your IP is worth? By IP, of course, if you didn't understand yet, intellectual property. So you can choose either the first reply, definitely enough to be valued, which means that you know what is IP and you already know the value. Maybe you have some lawyers helping you. Or the second answer, not sure, that's why I am here. So I will leave you maybe 20 seconds, 30 seconds to think, and please help to reply to this quick poll. There is no right or wrong answer, just for us to see a bit more about the expertise, the knowledge of the audience. I think we can stop, and I hope you were all able to vote. I don't know if we see the result. Wow, okay, so we have 70%, 71% of people who reply the first, meaning that we'll have to be even maybe in a expert mode today. No, I'm kidding. And of course, happy to see this, meaning that people understand that there is some value behind IP, behind intangible assets. Just quickly to tell you that IP valuation is playing like a very pivotal role, and it bridges a gap between business world, accounting, financial sectors. It's very like a key between different worlds. It's essential for unlocking the value of IP, but maybe you don't know all what is IP, what are intangible assets. So intangible assets, very briefly, because it will be explained later on. Imagine it's all the non-physical property of a business. It's very wide, a wide range of assets, the loyalty of customers, the fact that you have a strong reputation, and of course, what will interest us today, IP assets. Just to give you some more information about setting the scene, between 1995 and 2015, the share of intangible assets market value increased from 68% to 84%. There was another study done by Ocean Tomo. Maybe we can share this, the report, the study later on. They were investigating the value of assets after the COVID-19 epidemic. And the trend continued to accelerate and reaching out to 90% of the Standard Poor 500 market value, which is quite impressive. And nowadays, intangible assets represent nearly $80 trillion globally. And you can picture yourself that this is more than the world's five largest economy combined. And it increased 13-fold, 1-3, since 1996. So of course, we already see how important these invisible assets are important. And let's go to the next slide. I think now it's time to jump in to the key topic of today. And maybe I will ask Peter to share your screen. And in the meantime, I will introduce you.
Okay, thank you.
Okay, so we have Peter Kaldos, IP protection, IP specialist, specialized in valuation. He has over 10 years of experience in the valuation and analysis of IP and many other intangible assets. As we will discover, there are many different assets. He provides independent valuations for a wide range of purposes and sectors, including IP licensing, sale, purchase, capital contributions, joint ventures, acquisitions, strategic decision-making, and financial reporting. He works with IP attorneys, law firms, business consultants, on valuation engagement to help clients leverage. Well, there's so many things to say: patent technologies, trade secrets, brands, trademark portfolios. You'll discover afterwards what maybe these words mean for you. And he's also a member of two key associations, AMAVI, which is the Association for Management and Valuation of Intangibles, and LESI, Licensing Executive Society International, which are both involved with valuation worldwide. We're very happy to have you, Peter. And now the floor is yours to please enlighten us on the IP valuation topic.
Okay. Thank you. Thank you very much. Can I just confirm that you can see my screen?
Yes, we can see it.
Yes. Okay. So, good morning and good afternoon, depending on where you may be. And thank you for the introduction. So that can skip two of my slides immediately. And just to inform you that this is a slide deck which may be used for about an hour's worth of presentation. So some of the topics will be skimming over, but as you know, the presentations will be shared, so you can come back to these slides and read the details if you so wish. So let's dive straight into today's presentation, my presentation. I think that the idea of an introductory presentation on IP valuation, intangible asset valuation, is to get people to think about the importance of IP as an asset in their business, in their enterprise, and to start a discussion with their trusted advisors, counselors, maybe accountant, maybe their business advisors, and inside their organization. So if after today's presentation you are able to start a conversation within your organization about the importance of IP and how it can benefit your organization, then that's my job well done. So also, it's important to consider, you can start a conversation with an IP valuation professional. So now you have some kind of basis to begin a conversation there. So why is it important for SMEs in particular? Why is IP valuation such a key issue, and increasingly so? There's a huge amount of research. Some of this have been mentioned just previously. About how important IP assets are for SMEs, and they are increasing in importance. So I don't want to go very deeply into that, but a simple Google search will help you out with finding some research and some information there, all the way from how IP and intangibles have increased in value within an organization to how companies with IP and intangible assets are less likely to default on loans. So there's so many things that IP and intangibles are relevant for within the life of a business. The key point here is that IP should be and can be treated as an asset. So it is particularly key insight that it is very similar to other assets owned by the business, such as machinery, land, and other assets. It can be removed and transferred to other organizations. It has potential to bring benefits to the organization from future use. So an SME will use IP assets in their own products and services. So I always say that basically most companies will have some kind of marketing activity and some kind of innovation activity, and both of those will involve IP and intangible assets. So on the right here, you will see that the list of assets owned by the company. Some of them are intangible, some of them are tangible. The grouping of intangible assets, including IP, such as technology-based IP and marketing-based IP, is increasing. The tangible assets owned by companies tend to be stable or maybe even decreasing as time goes along. So not only that, but IP assets can be licensed out for additional income. They can be sold. They can be used to access financing, and this is a key area that is increased traction over the last few years. For example, banks are beginning to accept IP as collateral for loans. So this is a key point here. IP assets can be used to communicate with stakeholders about the quality of your organization, and also IP assets can be used for other aspects not listed here, but we don't have time to go into those today. So the importance of IP valuation, why is it important? Well, to access these benefits for your business, for your organization, some sort of valuation is usually required. Some sort of monetary valuation is usually required. For example, if you were to license or sell your IP, it goes without saying, for making decisions based on IP value, you can access finance in some areas, in some cases, joint ventures, and also for purposes such as tax disputes, IP value, and therefore valuation is important and is necessary. Accounting and financial reporting. So despite IP and intangibles being so important in companies, they are still underrepresented in financial reporting. So this is an interesting issue. Financial reporting tend to be very conservative. So there are only certain ways that IP and intangibles can be on the balance sheet. And IP valuation is a key point there as well. And having IP on your balance sheet will facilitate a lot of the other key uses of IP assets, such as transfer, such as finding investors, such as joint ventures, etc., etc. So let's move on to the main point. After we've talked about why it's important, I would like to talk very briefly about how IP valuation works, and the processes involved. And if you are to move into this process, so if you want to value the intangibles and IP in your organization, what to expect from a valuation and the results that you will expect. So how is that presented? I think it's important to talk about IP valuation as a process. So it's a field of valuation. It is, for all intents and purposes, very similar to the valuation of other assets, such as tangible assets and property and businesses. So there are parallels with IP valuation. So it's not something that is completely alien. There are familiar points there. I say this because people think that this is some sort of magic thing that we do. I would say yes, it is a little bit different, but I think it's relatable to other valuation valuation of other assets. It is also a profession. So the IP valuation profession, intangible asset valuation profession brings together different areas: law, accounting, business valuation, all sorts of different points, and depending on which assets we are valuing, technical expertise on that area, so brands, patents, etc. And just to conclude, I mean, the professional valuations are needed for a healthy and stable economy for all sorts of reasons. I've taken this sentence straight from the Royal Institute of Chartered Surveyors website, so it's not really up for debate. I think it's very important to consider that without proper valuation of IP assets, there is SME life can be limited. So, moving on to valuation methodologies, we have some problems because unlike tangible assets or for example, real estate property, IP assets don't have the same transparent functional market. So looking at market data and comparables is not always possible. It's very rarely possible. So we must use different methods to value IP. For example, what's called the income approach list of methods, or a cost approach list of methods. So the income approach will look at the benefits that the IP assets will bring to the owner in the future, and these will be discounted to the present day. So this is very similar to, for example, looking at how much you would be able to rent an apartment in the future, or a warehouse in the future, as opposed to looking at a market approach, which would be to look at how much similar warehouses have been sold in the area over the past few years. So we have to use different approaches. The cost approach is another one we use, and we look at how much or what kind of costs are involved in the development of similar IP assets to the one that we are valuing, and we arrive at a valuation using a cost approach to this. I think the main point here is that most people are familiar with the valuation of assets such as machinery, real estate, etc. There are transparent available markets to look at, and you can use those to compare and use what's called a market approach. We are not always able to do that, so we need to be more creative and inventive and use income and cost-based approaches to value IP. So this is an interesting slide, and I encourage you to look at this later in more detail. The point is that each of the approaches that we use to value intellectual property intangibles, is used in specific areas, for specific IP assets, and each of the approaches will include a number of different methods. And a lot of these methods can be used in combinations to arrive at a robust valuation. So it is not a single valuation methods, and in fact, it's not a single value that we provide. It will be one or two or even more methods, and it will be a range of value for your IP asset. So, as you can see, the cost approach. The idea is that we look at how much it would cost to replace an IP asset. So this is important because if you were to, for example, sell an IP asset to a partner, they will be willing to pay probably up to the amount that they would need to spend to develop something similar. So a brand would be worth similar value to what it would cost to develop a similar brand. So this is a kind of concept of replacement value, replacement cost. Market approach, as we all know, is to do with comparison of other transactions, sale or license. And as I mentioned before, income approach looks at the future benefits and discount the present day. Okay, so each of these valuation methods and approaches, will have its pros and cons. So these need to be looked at and understood. Some of them have the possibility to value or to undervalue IP assets in different contexts. So this is why the IP valuation professional that does the valuation will be able to help and to choose the methods that are most appropriate for the actual engagement. So I leave that slide now and encourage you to look at this a bit later. And obviously, any questions can be addressed to the Southeast Asia help desk and to myself and to Christine as well. So as I mentioned, it's not just a single method or approach that we use. In most cases, we would encourage valuers to use more than one method, depending on the purpose of valuation. So the purpose of valuation, as in previous slides, was, is it a licensing deal? Is it sale? Is it a joint venture? Some sort of IP financing deal that's going to be instigated with the valuation. So we would look at maybe using two income-based methods, or to use a cost-based method in conjunction with a income-based method. There's also a possibility to use what's called a indicator-based method. So, for example, if there is a number of, for management purposes, we have a portfolio of patents in a company, and the management need to make sure that only the important IP is kept and the others are let go, then an indicator-based method may also be useful. So the point here is IP valuation will be more than a single method. It will be more than a single value. Probably it will be a range of values depending on the purpose and context. What does a valuation look like? So if there is a valuation engagement, the first part of the process will be the definition of the context, the gathering and discovery of data from the client, from outside counsel, from other sources. After this, the valuation professional will decide on the approaches used and the methods and the combination. This will be followed up by the actual valuation itself and the determination of the results, and this will be provided to the client within a report, which they can use for whichever purpose they would like to use it for. And basically, this is very similar to the valuation process of other assets. So there's nothing hugely different here. It's just good to go through it so people know what to expect. I think weighting wise, the initial gathering and discovery phase is about, I would say, 50% of the work, but this varies according to engagement and value, depending on how quickly you can and well you can work. I think it's important to touch on the fact that different purposes of IP valuation require different levels of valuation. So basically, if you may only need to have something simple to pursue whatever purpose of valuation that you require. So maybe you have a management decision to make. Maybe it's not important to go very deeply into the valuation. You can do something very easy. On the left side here, on the axis, is the quality of the valuation, the precision of the results. On the bottom axis is the amount of resources required for the valuation, the time, and ultimately the cost of the valuation. Okay, so some valuation purposes, for example, tax, or maybe a very important investment, for example, will require a very comprehensive valuation, and clients are advised that basically this will be require more resources, time, and data to complete, and will be more expensive. in most cases, an optimal level of valuation will be found to balance the precision and of the results with the time and resources available for the valuation, making sure that the results will be appropriate for the purpose of valuation. This is a key point. So what I'm trying to say here, sometimes it is sufficient to do a low resource valuation. Other times it's very important to be very precise and do a fully comprehensive valuation. But most of the time it is sufficient to do something which is appropriate for the purposes that the valuation results will be used. So the final slide in this section about the process is the report. So this is a checklist of how a report should look. So if you have a valuation completed for your IP in your company, I would make sure that the valuation results and the report include, all these things. Again, these are not different to other assets. So we follow IP valuation standards, which also are related to other assets. So, for example, machinery or other tangibles. So we would need to know the context of the asset being valued. Why is it being valued? What is the asset? Who owns the asset, etc., etc. How the valuation was completed, the methodology used, all the data used for the valuation, and all the assumptions used in the valuation. So these are really key important points. The reason is that a valuation should be completely transparent and should be able to be repeated or in a certain amount of time using the same assumptions. So this is important to give transparency and trust to the valuation process. Right? How do we ensure quality and compliance of our valuation? As a valuer, we follow international standards and guidelines. So it's not a vacuum. We do have very good standards and guidelines that we follow when valuing IP and intangibles. Some of these are valuation frameworks. Some of these are specific to IP and intangible assets, such as maybe brands or others. Other standards that we follow are financial reporting standards. These are important especially for financial reporting, as the name suggests, and also transfer pricing. Now, this is an area we haven't touched on in this presentation, but is also an important area, and we have standards to follow there as well. Okay. I'm conscious of the fact that I'm a little bit over time, but there is only 2 more slides left. So, what to do next? My suggestion is to find out more. So if you believe that you have IP which is valuable in your organization, and you wish to find out the value or wish to look into valuations, maybe have a discussion within your organization and start talking with an IP valuation professional and have a conversation there. I think that that is the way to go, and you will find out more about the process and looking into whether it's something that's good for you. Some resources and some practical tips. So if I was to start looking into IP valuation as a company owner or decision maker, I would look at some of the valuation guides that are very good and available online for all. So I would just like to highlight some of these, and within these, the fact sheet on intellectual property valuation by the European Commission Helpdesk is a good starting point. But very good and very important is the World Intellectual Property Organization IP Valuation Toolkit, specifically for the ASEAN region. And that's all downloadable from the internet. But also the other ones that I've listed here, they're all very good. So it gives you a good idea of the process of what it is and how it's done. So I recommend those. And also, as I mentioned before, the standards that we follow, some of them are listed here. They also include information about IP valuation and intangibles valuation. So I encourage you to look at those. Once again, there'll be the presentations will be shared, so you don't need to write anything down now or take screenshots. I think that's a good way to begin your journey into intangible asset valuation. So a little bit over time, but I think it's still within the margins of
We're still
what's
okay,
allowed.
Peter. Thanks,
Okay.
thanks a lot. It was very insightful. And of course, now we know a bit more about IP valuation, about standards, about the fact that it's quite also technical. But now we'll maybe turn things a bit more practical with Christine. Christine, I'll let you share your screen. And in the meantime, just to briefly introduce you. And again, thanks a lot, Peter and Christine, because both are international experts. They join seminars a bit everywhere in the world. So Christine has an educational background in economics and management, and also since now a lot of years, she has been involved in the area of IP management and strategy, technology, landscaping, assessment, and of course, valuation. She's now the director of IP valuation for Adastra IP based in Malaysia. And they assist the clients in matters related to strategic and what we call transactional aspects of IP assets. She's also a member of a technology expert committee with the Asian International Arbitration Center, and also serving the fourth term as Secretary General of the Business Valuers Association of Malaysia. So we're happy to have you, Christine, because you are also have the local regional eye and expertise for this topic of IP valuation, and well, also among let's say the global leading IP strategists for valuation. So, Christine, the floor is yours now. Please share some more information on IP valuation for us.
Thank you. Thank you very much, Benoit, for the kind introduction. Good morning, good afternoon, ladies and gentlemen. Thank you so much for setting aside some time to join this knowledge session. Can you see my slides? And is it moving?
Yes.
Okay, great. Thank you. So I'll cover within the time frame that is given to me as best as I can, and hopefully the questions that you may have will sort of complete some of the takeaways that both Peter and myself would be able to share today. So I'll just quickly start with an overview of what's going to be covered in the next 20 minutes. The first is just a recap, perhaps a bit more detail on the specific type of IP assets. We hear a lot of IP assets, so we can dive in individually and talk about some examples of these IP assets. And then I'll go straight on to some of the regional do's and don'ts or regional peculiarities if you are embarking on IP valuation exercises. I will be sharing 3 cases of valuation assignments that I've conducted that will be relevant for SMEs. And also lastly, based on my experience of helping SMEs and business owners to either submit financial reporting or to support transactions using their IP assets, some of the tips that some of the back scene that you may want to be aware of before embarking on a valuation assignment. Okay, so just a very quick slide of the fact that intellectual property is made up of different type of assets, and each of this type of IP rights, for example, trademarks, copyrights, designs, patents, each of them have their own act or law according to each country. Most of the type of IP rights that you see on this page are territorial in nature, meaning that the rights that is given to you are it's based on the fact that you will apply and register them based on the countries that you are interested or you are trading in. And this is where the Southeast Asia IP SME Helpdesk will come into play in terms of, even before any valuation can take place, it is absolutely critical to sort of get your IP assets right, the identification, the assessment, and the strategy part of your IP. This is where the help desk will be able to help a lot. So as just an example, we'll talk through a few. So you hear a lot of patents. Patents is not just to do with product, a specific product, for example, a handphone or computers. Basically, patents cover a process or method, a system, or even a technique of doing something or enabling a feature. And sometimes it is also a composition of matters. So different chemical compounds, for example. And it's basically, you typically will hear it broadly described as technical solutions or an invention. So patents can come in various forms. A lot of SMEs that we deal with in this part of the world, at least, are unpatented technology, meaning that most of the time it is usually proprietary, it is unique, and they basically will qualify and can qualify to be filed as a patent application, but for whatever reasons, they have not applied for a patent. It doesn't mean that you cannot do an IP valuation on it. It's just that as a valuer, we will take into account some of the risks and vulnerabilities of unpatented technology. The second will be on, so typically all businesses would have trademarks. And so trademarks basically protect the elements of your identity. So a lot of countries have also updated their trademark laws to allow even, for example, color to be filed as a mark that distinguishes you from other businesses. Some are based on even sound and smell mark. So there's been a step change in terms of how businesses are distinguishing themselves from competitors, and this can be captured. So if this unique identity is able to drive cash flow and revenue to a company, and we can quantify the uniqueness that this IP has given this company into financial terms. So let's go down to the next will be on copyrighted works. So I think, when we hear copyright, usually we think of music, we think of songs, we think of books, but more and more, I think, in the digital economy, a lot of digital works, derivative works that comes from information or data that's processed into information, and even insights are actually covered by copyright. Okay, so copyright is one of the unique IP right that is not territorial in nature, meaning that number one, you don't need to register. There is no compulsion to register it in a specific country in order to enjoy the rights to exploit your created works. Okay, so both of this, whether it's creative works that is based more on, for example, music and artwork and literature, and versus data type, software, source codes, these are all things that can be covered under copyrights. Maybe just a quick link between, let's just say software. Software is quite important, especially for Southeast Asia. There's been a lot of investments in digital technology. A piece of software or a platform, an online platform or mobile app, you can actually have two separate protection. One is as a patent. So there are software or systems that is patented, but the source codes, the underlying source codes are basically protected by copyrights. So as a valuer, we will normally do a due diligence or an assessment of the various underlying rights to a product or to a solution or to a service. So the next one would be industrial designs. So if patents protect the function, designs protect the aesthetic look of a product. So it could it could be a shape, it could be a typical 3D format or 4D format or pattern or ornamentation. And this is only applicable if you are producing physical products. Okay. So for example, I'm not sure if you know, I know all handphones look typically the same, but you actually, I'm not sure you can see my handphone, but yeah. So if you have a handphone in front of you, a number of handphones are actually protected by industrial designs. I know you will say that it all looks the same. But yes, industrial designs are even applied to even small granular differences and features of a product. Okay, so just very briefly, just cover the other type of IPs as well. So geographical indications is something I think in Asia, as a consumer in Asia, we do buy a lot of products that has GI protection behind it that a lot of us are not aware of. So, for example, champagne is a very valuable and very popular GI. Because it protects the wine, basically the bubbly wine from the area of called champagne, and there is no one else that can use the word champagne. So the fact that if you say that you drink champagne here in Asia, that it must mean that it's produced and it is a product that is has a right to use the champagne and not just any bubbly white wine, for example. Okay. So other things like Darjeeling tea or certain European cheeses are quite popular here in Southeast Asia. Again, GIs are territorial in nature. Different countries would have different nuances in terms of registering the GI. So this is something that, again, the SME Helpdesk will be able to help. And finally, on trade secrets, I will just move on a little faster because I want to cover some of the substantial case studies. Trade secrets, either you are in a country that is that operates on civil law, or a country that, for example, Malaysia, that practices common law. Trade secrets you can value trade secrets. So, for example, if you have a business that has a special formulation for a paint, for example, or some kind of chemical formulation that you have kept trade secret, and this obviously allows you to make products that you can sell, and this distinguishes your product feature from other people. This certainly can be quantified and valued in any transaction. Okay, I'll move on next now to in terms of what's happening in Southeast Asia in terms of why you would require, evaluation. So as Peter pointed out, there are many reasons for you to undertake a evaluation of your IP. And in terms of the practices in Southeast Asia here, it is usually based on the requirements for financial reporting. In this case, so for example, and you need to work with a valuer for each country so that you can comply with the reporting standards. So, for example, in international valuation standards that Peter has cited, one of the rule or one of the guidelines in the standard is that if you are required to follow the standards prescribed or the laws prescribed in a specific country, that will override, for example, the requirements under international valuation standards. So this is where, again, it is important to seek a local valuer to understand the context. If you are undertaking financial reporting, that means you are doing an IP valuation to submit for financial reporting. Okay, so the financial reporting is usually because you have to report based on there's an acquisition, for example. If you have any mergers of any company or you have acquired business, you have to disclose in terms of the allocation of the price that you have paid based on the assets and the debts that you have acquired. So these are the requirements. So for example, for Malaysia, even a private company that chooses to submit their reporting under the Malaysian Private Entity Reporting Standards, one of the differences is that all IP intangibles are treated on a finite life of maximum 10 years. So it differs from Singapore, for example, where certain intangibles and IP have an indefinite life. So this will certainly affect the way the valuation analysis will be carried out. So these are just some of the finer points in terms of for you to be aware of in terms of different standards according to each country. I will talk a little bit more on transfer pricing in my case study, so I'll leave that aside. And aside from that, I think for litigation and damages, in the courts, if there's a dispute that goes all the way to court, usually there will be a valuation that may be compelled by the judge to determine economic damage or award assessment. So this is where, again, if it's specific to an IP, if the dispute is IP in nature, then the valuer will be required to support, and they will be an advocate of the court to provide the valuation report. Now, the question that we get all the time is how trustworthy, how trustworthy are valuation reports? I mean, how reliable they are? I mean, are they coming under the supervision of somebody is keeping an eye on valuers? The short answer is no. As far as I'm aware, I've done some reading across Southeast Asia country. There are no specific regulations on IP valuer, meaning that these are regulated by a government body. So far, IP valuers are bound by professional obligation to abide by both international and local standards. There is a bit different, which I will cover in my next slide. So, for example, in Singapore, in Singapore, you are allowed to claim a relief or a tax deduction based on IP that is acquired. So this is basically Singapore's initiative to encourage companies in Singapore to be more competitive by acquiring IP to be part of their business. So the incentive is that companies are allowed to claim write-down allowances against taxable profits. So some of the allowable assets will include patents, copyrights, trademarks, for example. Okay. And the purpose of the valuation is to substantiate the IP's fair value for tax deduction. So how much will be basically offset against your taxable profits. In Indonesia, just be mindful that while there are no regulations for IP valuers, if there is if an Indonesian business is applying or getting IP loans and using the IP as a collateral, they have to use a valuer that is registered with the government. So this is just one of the differences in Indonesia that I can find in terms of some of the peculiarities. But overall, there are no license or official license or regulated IP valuers. Okay, so just the first case study is on capital contribution using IP asset. So this means that my client here, she's a non-Malaysian. So when she had a business opportunity in Malaysia to set up a new company to go into the business of micro lending, one of the requirements is that our ministry that governs the licenses for lending activities requires a minimum paid up capital. So the group of shareholders came together, and because this lady has a software that from her home country that has already been using, she decided to inject that software into the company as an asset. And we were able to value the contribution of that software. And that value of the software became her capital contribution, and also together with other assets, together with the cash paid up from the other shareholders, they were able to satisfy the minimum requirement by the ministry without having to come up with too much of a cash. Okay, so this is the first case study on how the valuation of software has helped this SME to meet the requirements, and they were able to obtain the license to start the business. Case study 2 will be on how a startup company that was approached by a listed company to form a new incorporated JV, and they use the value of the the technology solutions from this startup to determine the equity between the listed company and the owner and the SME startup company. So the conclusion is that based on, sorry, not the conclusion. So let's look at the various parties. So the proposition from the listed company is that they have capital, cash, and they also have market access. So they have a ready pool of customers that will greatly benefit from a solution by this SME. This startup company, they have some traction, some traction in the market already. And the fact that this listed company for them is that because technology changes so fast, there is no point to take the risk of developing their own products. So they would use acquisition as a way to expand and access the new market with new technology. So the outcome is that using valuation of these startups solution, we are able to establish a clear equity basis by estimating the fair value of the contribution. Then case study 3, to determine an arm's length royalty. So I wanted to explain. So arm's length is basically making sure that when you transact with a related company, you have to transact based on the premise that the other company is not on a too friendly basis. So you've got to be objective in your transaction. And this is because to comply with OECD's call to avoid base erosion and profit shifting, meaning that to avoid companies basically trying to take advantage of the weakness or the loopholes in the system to reduce their tax liability. Okay, so for example, in this particular case study, we have on one hand a generic pharmaceutical manufacturer that manufactures supplements, and they also own the brand. For the distribution market, various regions, various countries in Southeast Asia, they are appointing a distribution arm, a marketing arm, but they are related company because they share common shareholders. So what is required from these two companies is that they have to determine a fair royalty rate and license structure for the two parties. So for example, the pharmaceutical will have to supply at a fair product price, and the distribution company will have to pay proper compensation for royalty, for example, in order for the tax people, the taxmen to assess and tax them accordingly. So this is the third case study. So I will end with some practical tips for you. So this is again based on our experiences of helping companies when we undergo valuation assignment. The first is always be very clear on why you're getting a valuation. Sometimes it helps to talk to valuers so that they can help you to crystallize. A lot of times we find that if you are undergoing some kind of preparation for a transaction, because it will very much help the valuer to decide the basis and premise of value. So once we know what is your goal and who will be the reader of the report, we are able to help you a lot more to achieve what is the outcome of the valuation. Choosing a valuer that you're comfortable with, and not just you're comfortable with, but able to understand your specific type of IP asset. So for example, if you have a special pattern or technology that is quite complicated, you may want to take a bit of time to find someone that understands your IP assets, because it very much need to establish the relationship between the uniqueness of our IP and how it drives cash flow and revenue and profitability to your business. To me, number 3, valuation process and resource commitment is quite important, because a lot of SMEs, they have very little time to set aside for things that is not mission critical. So be very clear when you talk to your valuer, so that they can explain to you how much of resource they need from you, because it may mean that you've got to compile lots of documents. It may mean that you've got to do a lot of your analysis in order to provide some sensible data to the valuer. Preparing documentation. Again, this is about making sure that you have financial and non-financial information relating to the IP assets in business. Importantly, to always request for a review. So preliminary review or work in progress, discussion draft, all these are important so that you don't get surprised by a report that you are totally not expecting. So I've got 2 minutes. So I'm over by a few minutes, Benoit. I'm finishing up. So this is not so important. So I'm just going to skip through. I think based on what we have covered earlier in terms of when to consult a professional, I think you're very well aware now that if it's in terms of the level of implication. So for example, if you are looking at financial reporting, which is basically you need to get it right, please get a professional. Or if it means the difference between paying, this amount of tax or, X or Y amount of tax, again, get a professional. If it means trying to negotiate on a deal that is substantially favorable to you, please contact a professional. And a lack of internal expertise, I think it very much needs to tie back with the purpose and context of what you're valuing. So that's the end of my presentation, and over to you, Benoit, for Q&A.
Thank you very much, Christine. Very relevant what you shared. I know we were a bit rushing, so thanks a lot for sticking with the plan, and thanks everyone for staying a bit more. As I explained in the chat, we'll maybe add 10 minutes more. We received some questions, so I'm very happy to share the questions, and let's see what we can share with the audience. So we received a first question. You will let me know, either Christine or Peter, who wants to take it. It's about IP due diligence, IP audit. Could you elaborate on IP due diligence versus IP audit and their impact on IP valuation?
Maybe I'll go first. I think because the word audit sounds usually it has a more serious connotation. I think probably due diligence is probably just as bad. But I think maybe instead of using it as in terms of to term it and how it will affect valuation, I would say that maybe let's understand the purpose of the valuation first. So if it's a purpose of the valuation, for example, for tax, right? If I, as a valuer, I'm engaged to submit a valuation for transfer pricing, meaning that you'll be submitted to the tax authority, I would actually do a proper audit, meaning that I need to be very clear about for example, so the audit will cover a lot more in terms of for example, to establish ownership, because in tax law, for transfer pricing, if you go for a DEMPE principle, it is very important to establish not only just the ownership of the IP, but also in terms of who benefits economically. So we need to do a proper audit in terms of the owner. And number 2 is the legal status. So I would say that between due diligence and audit, I would say that it depends on the severity or the seriousness of the recipient of the report.
Peter, do you have something to share, or otherwise I have another question for you?
Just a very, very brief comment on this. So within a evaluation, there is a qualitative aspect as well. So a valuer will look at the asset being valued and how it creates value for the organization, how it brings in income. For example, we would look at the effect of a brand on the price of a product, or the effect of a patent on the reduction of costs of manufacturing, for example. So these are not just quantified in money, but also qualified. So this is also an important aspect, not due diligence or audit per se, but it also impacts the valuation. So this is quite an important aspect.
We have a question from Dennis Afripi. Hi, Dennis. On IP valuation methodology, how do you determine which is the correct methodology for a particular SME? How to create trust that the correct methodology is applied for a particular valuation? Maybe Peter, do you want to share a bit on this? I have a question afterwards for Christine. So
Okay. So shall I start with this? Okay. So the methodology is influenced by the IP asset being valued. So, what kind of asset? Is it a patent, or is it a combination of patent and trade secret, or is it a combination of trademark and non-protected or less protected IP brand assets? So that would be the main part, and also very importantly, how the asset is being utilized. So I give you an example. If there is no potential, or maybe there is no plan for commercialization of a patent, it's very difficult to do a income approach, because we don't know how it's going to be used in the future. So we are forced to use a cost approach to see how much it costs to develop and use that as an approach. Now, this is specifically important for early stage technologies, for example, within a university, for example. This is a key point. So sometimes we are forced to use specific approaches. Other times we decide through a combination of expertise, for a combination of data available, the amount of time that we have to do the valuation, and a few other aspects, which methodology we'll be using. And how to create trust. I think transparency is key here. So we will be everything that we do is reported in the report. The data that we use, the methods that we use, and any assumptions that we make, for example. And this is to build trust, not only for the client, but for whoever will be using or utilizing whether the report, whether that's a tax authority or an investor or a bank, for example. They will need to understand, and transparency is important there. There may be disputes, as in there might be disagreements on the value and the methodology, but these can be addressed if there is full transparency in the report, and they can be maybe adjusted if there is something that an investor will be keen to include or not include, and therefore a specific a tailored value can be developed for them for that specific purpose.
Thanks a lot. We saw, in your presentation, all the standards that have to be followed and applied.
Yes. So yes, of course. And also these methods, they are all included in the standards and the guidelines. So anybody who wants to check up on this and make sure that everything is above board can look at these standards as well.
Okay, thanks a lot. I have one final question for Christine. This is a topic that was touched in the big seminar with the WIPO a couple of weeks ago. Based on your experience and observation in Southeast Asia, are we ready for IP as a collateral? Please share an example. If not, how about other regions?
Okay, thank you, Benoit. So in Southeast Asia, we have not come across a concerted program or a specific loan product that is offered by a commercial lender. We have seen evidence that specific, limited time type of IP lending program that usually facilitated by development banks. So, for example, Singapore has done one a decade ago. Malaysia also, we have done a specific fund to finance IP using IP as a collateral. But these are basically time limited type of a program. So it has not been continued. So in order to answer the question, yes, we are ready. In terms, when I say ready, means that in terms of for countries that I'm aware of, for example, Singapore and Malaysia, in terms of there is no regulatory impediment to disqualify IP as a collateral. So, for example, I will take Malaysia. So we have Malaysia. the Intellectual Property Corporation of Malaysia has amended several of the IP laws that specifically acknowledges and recognize IP as a movable property and thus can be subject to security interests. And they have set up a registry that will record any security interest that is placed on IP assets. In addition, for example, Malaysia, we have to be tabled this year what we call it the Movable Property Security Interest Bill, which basically covers IP as one of the asset class, which can be considered as a movable property and thereby available to be pledged by businesses, especially SMEs, to the banks to obtain loan. So in terms of readiness regulatory, a few countries in Southeast Asia, there's no regulatory impediment. So in terms of demand, lots of companies are waiting with bated breath in terms of who will take their IP and give them money for it. So now the last hurdle will be the commercial lenders. When I say commercial lenders, because these are the toughest group to sell to, that for them to provide funding for SMEs to grow the business. There will be hopefully some programs soon that is coming in this region. We are hoping that it will be announced soon. There are some elements of initiative by regional banks that will be offering IP loan as a proper loan product. But so far we have not seen any proper announcement. In UK, for example, the banks, HSBC UK and National Westminster Bank of UK, they have been lending specifically against IP by taking IP as a collateral for more than a year now. So in a way, there are already some data that has been collected in terms of successful lending against intellectual property. So now the next stage is about looking at default data. So this is where the current development is at.
Thank you very much. And yes, indeed, we could keep on talking forever and ever. It's a very interesting topic. I think it can interest many different sectors, and maybe there will be another webinar on this topic. It was the first time we're tackling this, and very happy to hear both presentations, also to see questions from the audience. We will quickly share. Well, these were the one among the resources shared by Peter, but please take a look at all the resources shared. You will receive the PPT afterwards. These are from our colleagues, European Helpdesk. Just to share also briefly the QR codes, like this, you can also share your concerns or your feedback on today's presentations and the whole webinar. And well, I think it's time to say goodbye. Just remember that we talked about IP valuation. In valuation, there is value. Don't forget that you can use, protect, enforce. Don't disregard this aspect. And we are here to educate, advise, and support you. Any questions, feel free to let us know. Send us an email or through LinkedIn. And of course, we'll be happy to reply and also forward the questions to both of our experts. Thanks a lot, Christine. Thanks a lot, Peter. And wishing everyone either a nice day or a nice evening ahead. But stay tuned for other activities of the Helpdesk. Thanks a lot again.
Thank you.
Thank
Goodbye.
you.